Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Former US President Benjamin Franklin once said, "Tell me and I forget, teach me and I remember, involve me and I learn." Now really think about this quote for a minute, then apply it to what you're doing and have been doing on your journey in the stock market, and you may just get a light bulb moment with the answer. Tonight we have another great show planned for you, so sit back and be open to learning as we take you on a journey to cover many interesting topics and stocks, including Fortescue Mining, Dicker Data, Santos, Westpac, Elders, Data3, Charter Hall Group, and so many more. As always, our aim tonight is to inform and educate you as we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is top 3 infrastructure stocks for growth and income in 2021. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Howdy.
How do? How do you do?
You weren't expecting me to say that, were you?
No, I wasn't. I love your quotes. That was a ripper, that one. That was a rip snorter.
Oh, goodness. That's because it was his.
That was Benjamin Franklin's.
I know, you put it in there, though.
I know, but it's just so true,
Good
isn't
idea.
It really is so true, that sort of stuff, because I know it's like, how do people learn? And a lot of people think, and people come to us and go, oh, I just want to go and sit in a seminar, you know, and I go, well, how are you supposed to learn? You're sitting there falling asleep, you know. So it is so true.
Are you telling me you've never done that?
Yeah, I've done that before. It's like, but the statistics are, when you go to a seminar or a weekend workshop, the statistics are that within 6 weeks you've forgotten about 60% of it, and within 3 months you've forgotten about 85 or 90% of it.
What did you go for?
Hey, why did you go for? And the other statistic that I see research-wise is all the books and manuals that you get, you put them on your shelf.
Right.
And then 5 years later, you haven't looked at them again. How many have you got on your shelves that you've been to you haven't looked at in years?
Surely we don't get books and manuals these days anymore.
Well, not nowadays, but in the olden days, you know, and when I was a bit younger. But it's a bit like that people do it, and that's why the quote is like, well, involve me and I learn it. And that's why when you go into like a seminar or workshop, it's that you're just passive.
You're trying to inspire people tonight, aren't you?
Well, I am. Just get involved. I mean, we talk about a lot of stuff on this show and a lot of things like, you know, stop losses and all sorts of other stuff, and we try and encourage people to do it, but we still keep getting the same questions with people making the same mistakes.
Hang on, I like some of the questions that we've got tonight.
Well, we do.
Moving on, it is the second Tuesday in the month, and this means we take a look at the sectors in the Australian market. So let's get into the charts. Okay,
on your screen right now is the watch list for the sectors in the Australian stock market. So how about you try to chat about this?
This is one of my favourite parts.
And it's a monthly one. I checked before the show, so you didn't.
Yeah, okay. Yeah. Okay, beautiful. So information technology is at the top of the leaderboard. Now stop trying to grab the mouse off.
Well, I need to, because I need to fix a little bit, because it's not perfectly on our screen.
Behind the scenes.
No, it isn't. It's not perfect. And if it's not perfect, then now it's perfect. You can have it.
Okay, fantastic. So information technology is up 14.8%.
You can have the mouse.
You can be my hand, my handyman. You want to do the mouse?
No, I'm married.
Okay. Financials is the second one in the list, 5.21%.
That's good.
The ASX 200 consumer staples is up 3.18%. Consumer discretionary up 2.63%. Now that's really good for the consumer staples and discretionary to see them go up around these sorts of figures on a month. Yeah,
that's good, isn't it?
Nice and steady as we go. Healthcare 2.6%. Utilities up 2.24%. The Australian All Ordinaries Index up 2.17%. Wouldn't it be nice if the stock market just went up a few percent every month, and over the year people could just get
It would be nice.
They used to have those graphs before the GFC hit. It was a linear line, and everybody thought that's what the stock market did, even though they knew intuitively that it would go up and down. Nothing happens that way, as you know, and you've seen on this show. So 200 communications services, 1.5%. The ASX 200 energy, minus 0.68%. Industrials, minus 1.2%. And materials is actually the bottom of the board, minus 2.76%. But that's not much, when you look at how volatile material stocks can be, to fall by that's really little, isn't it?
But it gives you an understanding of why the All Ords is really only up 2% for the month. I think it's up 0.3% this
Yeah.
week or something, not very much at all. We had this big one move early last week. Monday was the big move, and then the rest of the time since then it's been doing nothing much.
Well, look, I guess materials are holding financials back because the financials are doing quite well at the moment. But the financial stocks, the banks have been going sideways.
Yes.
So,
Very
you know,
much
it'll be interesting to see what happens next month.
But I wouldn't get excited. To me, the one thing is with the information technology, people will be going, oh, look at that, let's get into that sector. But pretty much that's Afterpay.
That's takeover.
That's that whole Afterpay takeover has really, really pushed it. And I think that can lead people to have FOMO, to go, I need to get into this area. I need to jump into stocks that are like Afterpay because they're going to be the next ones.
Well, that's
that are
already
gonna go
happened
through.
because some of the stocks in the sector, though, have actually moved up with the excitement about the takeover.
Yeah, I don't know. It's strange that how people think like that. Let's go and have a look at the yearly basis of it, just to show you a little bit of a difference there on a yearly basis. If I can get on the right little button there and see what's going on, and you can see information technology is now down the bottom.
Yes.
From that on a yearly basis, so that jump is really just, and that's up 6% even after being up so strongly this month. So that leads you to believe. But we're looking, here. Yeah, keep going.
But we're only just partway, past the halfway point for the year, because we're in August now, so we're not far past it. And I guess this doesn't tell you the picture of what's going to happen at the end. And we don't.
Correct.
On the show, in previous shows, we've talked about some stocks, remember, and how they've performed year after year, and how there have been some years of losing years, some years are winning years, etc. over time.
Yes.
And we really don't know. For example, we haven't done that with the financials.
No, we haven't done that, so we might be able to do that. Because I know we've got to do the research anyway, because the Financial Review asked us today to do some work on what we think the market's going to be at the end of the year and what we're going to be into 2022.
Yep.
And I think the Australian, or was it the Age? The Australian, I think, asked for some stuff as well today. So we've got to do the research anyway. So how about I do the financials?
Yes.
And do a spreadsheet for that.
Sounds great.
How's that? Deal?
Excellent. I think you should do it.
Well, that's it for our take on the sector, the sectors in the Australian market.
Now it's time we get into our first email for the night. Yay, excellent. We've got an email from Lanny. Are you going to take that one away?
Well, I will if you let me. It's like, gee. So our first email tonight is from Lanny, who says, hello, Dale and Janine, hope you're well. I would appreciate it if you could please provide analysis on Atomo Diagnostics, which is ASX ticker code AT1, and or Anotech Limited, ASX code ADO. We're only going to do one. As always, thank you for your analysis. Looking forward to watching your videos every Monday and Tuesday night. Thanks, matey. Regards, Lanny. Or it might be a lady, I don't know. Should I say that?
It's okay. This will be short. I'm sure the person will understand.
Be short and sweet.
Short and sweet. Look, there's not much data to discuss at all.
There's 2/5 of nothing.
And I don't know what space this is in. Obviously, diagnostics must mean science, medical, but I don't know. He didn't say what it was.
I've never heard of the stock myself.
Yeah. Now, I mean, look at it. Look at how far this stock has fallen. Now, we're on the monthly chart on the left-hand side. We can see from that all-time high the level of volatility that we've experienced. Well, we can't actually see it because it's cut off by the side of the chart. This thing's stuck there. So do you want to take it over? Because it's not performing for me.
Gee whiz. What are you doing? Your mouse hand's not working. That's what you're telling me.
It's your computer.
It's not. It's our computer. I share with everything. I was taught to play nicely. There you go.
All right,
That's nearly 80%.
down. Now, if that doesn't give you some sort of indication about the level of volatility that this stock is going to experience over time, nothing will.
Looks quite illiquid,
how many
doesn't
stocks
it?
fall by that amount after they launch? We know that a large percentage of stocks will fall in the first 12 months after their listing, but that's fallen really quickly and dramatically because of COVID, but then it kept going.
Look at how illiquid it is. It's just not there, 1.7 million shares traded on that day at, 20 cents. That's not a lot of dollars going into it. So I don't have any good news on it. I'm not sure about you, but...
Well, it's tough, isn't it? I mean, you're on the weekly chart there, and at the moment it looks good. It's starting to look better, I should say, the fact that it's moving up over the past few weeks. It doesn't mean it will continue, but I'd be a little bit watchful of levels above 30 cents. Somewhere around 30 and 34 cents will be really important for this stock.
Totally
it's got to get above 30.
And then around that sort of 45 sort of cent mark could be the next one above that. But again, it's people saying, well, they're asking how far this is going to go. And right now, it's I wouldn't put a lot of money into this sort of stock. I'd just be treating it as more of a high risk buy if you were going to buy it.
If you were going to buy it, you probably wouldn't even go near that one. It's got no history. You can't analyse it because you need, at least 3 years.
You can. You're just not going to be a solid.
It's not going to be reliable.
All right, so that's our take on Atomo Diagnostic.
Okay, our next email is from Kerry. Good evening. Loving the collective wisdom. The P2P lender Plenty hasn't appeared to impress the market since floating. Is it a longer-term Aussie fintech play to buy into? And what targets to watch for, Kerry? Great question.
It is a good question.
PLT is the stock code,
And it's
Plenty
another one
Group.
with almost no history on it.
Almost no history, but it's just taken off incredibly well after the COVID recovery. So it's done really well. We like to see little stocks like this, and it looks really nice. However, at this point, because it's gone to a new all-time high, if you weren't already in it, it'd be a bit of a challenge to try to work out how you're going to buy it. I'm excited about the stock from the point of view that it's, one, trading above $1. Two, it's actually, broken through all of these peaks across here. This was back in, the time to buy would have been around here in June 2021. It's all good in hindsight, but it's looking nice at the moment.
Yeah, it is looking nice at the moment, but it did what normal floats do is, or floats quite often do, is they fall away after the float. So it's done that, and it's had 2 strong months up, really. So that's really what we're seeing here, even though that was a bit weak towards the end. So it'd be interesting to see. But it's interesting, people often ask us, is this going to be a new Afterpay or a new something like that?
Yeah.
And is it going to be a long-term thing? You don't know at this stage because it's just too young and too... there's not a lot of data on it. It is a small company, so you can't make those assumptions right now. All you can do is, if you own it, stay with it until it tells you to get out of it and use a trailing stop loss or a stop loss on that, and really that's all you can do. It may end up being a great company, but you just don't know right at this point in time. But thank you for the question. Now moving on is a question from, I'm going to try and say this right, Gillham, who says, hi Dale and Janine, what is more important when analysing a chart, the closing price or the wick and stem? Can you please explain? Cheers and beers, Gillham.
Cheers and beers.
Cheers and beers.
Love it.
Geez, do you want me to answer it? Okay,
Yes.
I'll answer it. Okay, something that really it's analysis of stuff is really not just one bar, and when you're just looking at one bar, you need to look at it in combination of lots of bars on a chart and what patterns they're making. If you're wanting to look at a bar, because you were quoting a candlestick with the wick and stem, basically, it's the closing price is the most important price out of the open, high, low, close. The closing price is always the most important, but then is it a day, a week, a month or a year? And what is that in relation to other? So it's a lot more than that when you're doing your analysis. So, because one bar does not make a sheep station. If a bar closes strong, doesn't mean you're going to make $1 million in the next period. So I think, you want to add any more to that?
Yeah, I'd also have to say, look, why is that important?
Well,
why is the closing price important to somebody?
Well, the closing price is important because, as the old saying is, the amateurs open the market and the professionals close it. So the closing price is generally where the market wants to sit for overnight.
Okay, so why is he asking that question? Because is it because he's looking at a stock that's reversed and it's closing down, or it's closing up? He didn't really say, did he?
He doesn't tell us.
No.
He's hiding that from us.
It's always good to look for stocks that are actually closing strongly at the end of any week, isn't it?
Yeah, but one bar doesn't mean much. That's what I think what we see a lot of people do. One bar doesn't mean much. It's about a collection of bars and what patterns it's making in time and price. And so you really do need to look at it as a collective rather than one single bar. Unless you're really doing short-term trading, day trading, that sort of stuff, then you still combine it with other rules and tools, not just look at the bar on itself.
You'd still be wanting to look at the weekly chart even still.
Yeah, absolutely.
So look, we've got another question, and this next email is from Rohan. Hi Dale and Janine, can I please get you guys to analysis CHC? Bought it in June 2021 for $14.35 and I'm looking to hold it for the medium term. Looks good so far. What do you think, Rohan? So, okay, you've got
Charter Hall
you're good,
up.
aren't you?
I'm
good
excellent.
Little assistant.
Yep.
Charter Hall,
That looks
CHC,
excellent.
it looks lovely, doesn't it? And it's just kept going from strength to strength. Looks like he bought at a really good time as well, around about. And I just think, while you're on it, you would just stay with it.
And I'd draw a trend line up
is
underneath
beautiful.
that.
Yeah, nice trend line up underneath that current run from the low down here in, March 2021?
Yeah.
Be really nice up there.
It's doing brilliantly. I can't say enough about it. I think I love it. If you're not in it, would you get in it right now?
No.
Okay, so if you're in it, stay with it because he's in it, isn't he? Didn't he say he was in it?
He did.
Okay, so I just
see
stay
that
with
line
it.
I've drawn on the chart?
You are. That was a very good... Oh, sorry, I forgot.
That means
I wasn't
buy.
listening to you. I was ignoring you with almost called the domestic deafness.
Really?
But, yeah, but I'm not married to
I'm going to tell your wife.
You're going to tell my wife.
All right.
She knows I'm good at that. Okay. The next email is from Mel, who says, "Hi, Janine and Dale. I was wanting to ask your view on Atlas Arteria. I purchased this stock at $6.75 in May 2020. Now, everything seemed to be going up, and I guess I thought it would return to its pre-COVID price and be a fairly safe stock. It bobbed around my buy price until around November and then spent many months down for me. Now, I did not sell it as I felt, based on history, that it would turn around, and I was receiving dividends along the way. Over a year later, and it has slowly been grinding its way back up. Do you think I will see my buy price again anytime soon? Regards, Mel."
Great question.
It is.
Okay. So did you help this person with that question? Did you cut a lot out of the email, I mean?
Only a tiny little bit, I think.
Gee, that's really good, isn't it?
She's a very good question, yeah.
Yeah. Now, look, the interesting thing about this stock is it's one of the stocks we're going to talk about tonight.
I know.
So you'll see in pink.
So that means you're not going to talk about it now?
I am. I'm going to talk about it now in relation to where she bought it.
Okay.
So the interesting thing is that the stock had been moving up. So May 2020, let's just have a look.
Yeah,
people might have to get their magnifying glasses out
I
to
got to
see
put
this.
my glasses on.
Yeah, I noticed. That's why I said.
Don't call me old. I'm just well used.
May 2020. Okay, so here we come back here. We've got May 2020. So back here.
Wow.
She was quite game there in picking it at that stage because it hadn't really confirmed that it was going up at that point. So that's probably part of the issue here, is that there's no real rule to be purchasing the stock at that stage, and often stocks can go up. They could even go up for 6 or 8 weeks and still not give a proper buy signal, and then then eventually you get the pullback like we've seen. So she's bought around this sort of level, I think, somewhere around those levels.
Yep.
And then the stock's just fallen away, gone sideways. And when stocks do that, there is a real risk that they could come down and take out some of these lows. Now, it's looking sort of like that at the moment, the way that it's unfolding. It may not get back through this level where she's bought, but it really has to get above this bar. So she's really got to, the important thing is to see it actually make new highs or higher peaks as it's going back up. So this high of 637 is actually a lower peak at the moment. So we want to see it get back above that point there in the short term for it to keep going up. If it goes below this low here, which is May 2021, I think there's a really strong risk if it closes strongly below that we could see it take out the low here.
Well, it's not wanting to, at the moment, it's not really wanting to fall greatly, but the issue is we don't know whether it's a short-term, medium-term or long-term, or whether she just bought it for any reason.
Well, she just wants to know whether we think it's going to get back to her buy price.
Yeah, but if you buy a stock and you go, I'm going to buy this for long-term, who cares?
Well, you still do. You still can trade it. And
why?
Because we do. We teach people they can do this on the monthly chart.
We teach that, but if somebody, I'm not talking about our students, I'm talking about people who
Yeah, but what if they buy for long term and then it falls all the way down to $3?
That's the price they pay, isn't it?
Oh, that's the risk they take, you're saying,
Correct, that's the risk they
that
take.
strategy, which is having no rules.
So she may have had a long-term buy and hold, so who cares about the fluctuations? She's just not making money at the moment, so she's asking the question, well, am I going to get back to my buy price? So if her view is still long-term, and that may be why she bought it, then what's it matter? Eventually, it will go back to her buy price, eventually.
Yeah, well,
there's always
it depends whether she wants to protect her capital or not in the process.
That's the next question,
That's the next question. And look, I mean, right now it's only down for 1 month. When you look at this is the monthly chart that I've got up here, and so when you're looking at the monthly time frame, it actually creates a different picture, because when you're looking really short term, you can have a knee-jerk reaction to things. So what you're saying is if she's trading longer term, she could be looking at a monthly chart instead of a weekly chart.
Yeah, you don't need to look at a weekly chart.
Yeah.
And yes, she's down a little bit. She's been down. She hasn't been doing well for the last 18 months,
But it's still part of this sideways move, so
Correct.
it really hasn't changed direction.
No, but is it likely, if in the next 10 years, is it going to be likely to above her buy price in the next 10 years?
Oh, you would hope so. You would think so. Look, these infrastructure stocks are good stocks that over time should continue to rise. But at the moment, there's this strong resistance level across here. If it went above here, you'd be buying, because you'd be thinking it's more likely to head back to the all-time high.
Correct.
So it's not a bad stock to have for one of those buys, as you say, for medium to long-term hold, because they generally produce good capital growth and income over time.
Cool. All right, I'll let you off the hook now.
Okay.
Okay, now it's time to get into tonight's topic, the top 3 infrastructure stocks for growth and income in 2021. Now, large corporations are snapping up infrastructure companies around the world, which pushes up stock prices. Now, we will discuss some of these companies that we believe are best infrastructure stocks on the market, when to buy, and the important signs you need to watch for when opportunities or to profit are or they do present.
Last week, Afterpay was snapped up by a large overseas company, causing a 30% plus surge in the Afterpay share price. Now, this drove up prices of other stocks in the sector, which often occurs when there is a flurry of information about a takeover. Another recent action was from an overseas company attempting to take over Sydney Airport, which excited the market, and we were encouraged by the resolve of the board to reject the offer, given we view the takeover attempt as opportunistic, as the COVID pandemic is really dominating that landscape. I once read a book by Naomi Klein called The Shock Doctrine, and it demonstrated what occurs when there's a crisis and how big business look to move in at an opportune time to pick the best infrastructure companies when prices are low. What's interesting about that, just briefly, is the fact that individuals tend to go inward.
Yes.
Right, and they'll
so.
shun or shy away from risk at that time, whereas a lot of these big corporations in the know, they see that as the opportune time to just go out there and buy.
There's a real smart man called Warren Buffett. Says buying doom,
when
selling
there's blood
boom.
in the streets.
When there's blood in the streets, go out and buy. And most people do the opposite.
That's right.
They shrink, and that's what you're saying about they run from the market rather than run towards it.
Correct.
So, but anyway, there are many other stocks that could be on the radar of companies with deep pockets who have just been waiting for the opportunity to pounce. Now, infrastructure stocks can often provide opportunities to make short-term profits, and that's great if you happen to choose a company that gets taken over, provided your holding is in profit. Now, we're going to discuss this situation as we get into the stocks. Now, many investors just simply want to buy great companies that will provide long-term reliable growth and income, and generally infrastructure stocks will provide both capital growth and income for investors. So let's get into the discussion on some of the best infrastructure stocks on the Australian market and bring up the charts now. Now, I guarantee, I haven't even looked, but I guarantee you got more than 3.
I have. You know me too well.
As I said,
I could have had more. I wanted to put, a whole heap of stocks up there.
You say 3, but you put more, and I guarantee you should be...
Well, I was just sort of, fudging or smudging, if you like,
the
border.
You've got a qualification to be a personal trainer.
And what's not.
Yeah, you are a personal trainer because you lie all the time, don't you? And it's always, 1 more!
All right. The Atlas Arterial.
Okay.
We just talked about it.
We did.
Right. Good opportunities in stocks like this.
Yep.
Why? Have a look how the stock has trended in the past. It's a beautiful trend. This is a monthly chart. Let's just have a look at some of the volatility that we tend to see on these types of stocks. 31%.
Yep.
Now, we have to put this in perspective. This is actually launched on the market post the GFC. So it launched at a perfect time. Anyone who's looking at, the growth of a stock after 2009, you're just looking at all upside. You're not considering the downside risk. And then we've seen COVID. So we really don't know what the true personality of this stock is because we haven't seen a full cycle yet.
But couldn't you look at stocks that are similar to this?
Exactly.
Okay,
yes.
I'll shut up.
So I have one of those to talk about tonight.
Okay, Dale, be quiet.
And I did not prompt him to say that either. That was involuntary.
We just think alike.
I didn't have the ventriloquist, hand going.
I felt that thing in my back at one stage.
Yep. Okay, so we can see here on the right-hand side of the screen, we've talked about this sideways move. Now, we were talking, the previous person that emailed in about this was looking at, do they think the stock we think the stock is, likely to go above the buy price? Now, what I'd like to say is, even though this is post-COVID, it's not out of the ordinary for infrastructure stocks to do this because you're talking about a period here, what have we got? April 2011 all the way through to July 2013, so 2 years. This thing went sideways, okay? We've also got this period in here from March 2014 all the way through to September 15. So there's 18 months in there. And this sort of thing repeats, although it gets shorter. The sideways moves just tend to get shorter, which I think is almost a sign that the top was coming in there for it. Now, how long have we had? We've had about 12 months. It's not out of the ordinary for this stock to do it. Could go for 18 to 24 months sideways before we see it take off. So that's all I really wanted to add to
Can
that
I ask
previous.
a question?
Yes.
Have you overlaid recessionary periods on this stock?
No.
Because that might help you.
How?
Well, because it's infrastructure.
Oh, okay. I see where
So
you're
you're
coming
looking at it, if you overlay what are the recessionary periods. Obviously, with COVID, we had 2 negative quarters of GDP. 2 or 3? 2 or 3, I can't remember now. I'm getting
Well,
older.
they're trying to say I think it's worse than what it is in overseas countries at the moment. I heard them talking about this in America, I think.
Yeah, but it's like when you're in a recessionary environment, what's actually going on? So therefore that will show you, well, some stocks perform better in a recessionary environment, others perform worse.
Well, as we've seen, whatever went on, because we know there was a big correction in the stock market into 2000, post 2010.
Yep.
We saw that big pullback on the market. This stock has actually held up reasonably well, gone sideways, but more or less reflected what happened on the overall market with that pullback and sideways move. I would say that people just have to be patient with a stock like this.
Okay.
Yeah, that's really all it is. But I think it's a really good stock. Could it be a takeover target? Not sure. Right now, whether that would be something that companies would be looking for. If it was pre-COVID, maybe.
Yep.
But right now, I mean, the numbers just wouldn't be there. But could there be opportunistic companies out there looking for something like this?
You'd think so, because you'd think they'd be looking at these times when there's companies are worried about their future, because obviously future cash flows coming in. With the pandemic spreading around the world more, there's a lot more second and third waves going on. So they'd be looking at, well, how do we secure up the companies? So, and this is obviously where Afterpays come in with Square, and there's other ones coming out.
Yeah, you see good to great, and then there's takeovers for the ones that have the biggest opportunities out there.
Yeah.
Look, I mean, I guess we should move on to the next stocks and have a look at Spark Infrastructure. So here's an example
so good, doesn't it?
of a stock that's done incredibly well. I mean, it had one of these sideways moves, and so this is another one where patience is really important. It's more or less gone sideways like what we saw Atlas Arterial. So could Atlas Arterial be the next opportunity like this? It's in a different area, but look, in terms of Spark Infrastructure, I think if you weren't on the stock, or you didn't have a holding in the stock right now, then you wouldn't be trying to buy it at this point.
Because we still don't have huge amounts of history on this one either. We've only got, since 2016, so we've got 15 years of history on this one as well. So it's not as long.
But see, this one gives you an example of what happened during the pullback during the GFC, which is something that's really important. So we've actually seen that this stock actually fell back almost the same as what the market did.
It did, yep.
So that's to be expected. Now, what happened with COVID, when COVID hit in 2000, well, it was actually already in decline. See, we can see here that the high was actually in June 2019. It began to fall away. The COVID pullback was more or less this amount here, which is far less than what the market fell because it was already in decline, I'd say. But that actually unfolded in a really nice little pattern.
Did.
And you would have to say that over time, given that pullback that occurred, that this stock could be a $3 stock, right? But it's trading around $2.70 at the moment. I'm not sure if there's been an announcement that's come out. I haven't followed the stock over recent months.
But it is looking really, really nice.
It looks fantastic if you're holding it. That's
okay. So what's the next exciting? How many have you got?
Now,
They're all
Sydney
pink.
Airport,
There's lots of pink everywhere.
I was really interested in this whole announcement about the takeover, because these big infrastructure stocks. We need these stocks to get bigger. We need them for our super funds, because these stocks underpin growth and income in client portfolios. So similar to banks, look at the chart over time. You get these really lovely trends up, long-term trends up, before the declines come back in, and then they take off again. So looking at the overall pattern of this stock, you'd have to say that this could go to a new all-time high eventually.
It could. I mean, obviously what's going on at the moment is it's just drifting around because of that takeover news that was around.
The market's hanging in there.
The market is hanging in there. So hopefully of a better buy offer or whatever that is at the moment. But would you get into that right now?
It'd be a high risk proposition.
Yeah,
Yep.
in my view, it would be high risk. And I think, and to me, I don't know whether it's just being Australian or what, I think Australians should own these sorts of stocks.
Yeah, I do too.
Not overseas companies, whether it's Macquarie Bank comes and buys it and puts a part of their Macquarie infrastructure type of their assets, or whether it's another Australian company, but I think Australians should own stocks like this.
I do too, agreed.
So what's the next one we've got?
We didn't argue on that one.
Okay. Damn,
All right.
I was trying for an argument.
Transurban. Now notice the shape of these patterns is all very similar. I'm just going to flick back to what we saw in Atlas Arterial. Then we go forward to Ski. We see these big sideways moves. Again, we've got Sydney Airports and Transurban. Now, Transurban's actually fallen quite strongly this week.
Yes.
When you look at the monthly chart, it doesn't mean a lot because it's just 1 month down after it went up for 3 months. So and last month was an inside bar, so it didn't go higher. What this stock really needs to be able to do is get through this prior high here in June of 1506. So it was actually pushing up towards that level and has since been sold down. Now, stocks will go up and down as they rise and fall, and there are cycles coming in here that are pulling the stock down into a low, and it needs to have a low like this. So we're just watching Transurban to see whether it will eventually recover. But if we stay in lockdown for lengthy periods, how's that affecting companies like Transurban?
Well, you'd think it would affect them a lot, but it's all really got to do with, well, what kind of stimulus is the government wanting to do, obviously, because now with the lockdowns, it's a really good time to get out there and do more infrastructure projects as well, too, because obviously less traffic on the road, less people moving around, you've got more chances blocking off roads. So they did a lot last year, but how much can they continue on doing? Well,
the issue right now is that they're coming out with their hand out, by the sound of it, wanting more money from the government to put it into the projects. So,
how much money do these guys make from things such as toll roads and stuff like that?
Oh, look, Transurban are a big infrastructure developer, and they're incredible in terms of what they get involved in. So their portfolio is quite huge, and they've got multiple projects going on. They're a lot more diversified now. But I think it's going to be a reflection of every other stock within the sector, really. They're going to follow similar patterns over time. So you could pick a stock and most of them will probably go up over time, but it could be that we're in this phase for the next, 12 months where the stocks are more or less trading sideways or slightly down.
But would this one be a potential takeover target? Because that's sort of part of what we're talking about here is what stocks might be a takeover target.
It was more about two things. One is a short-term opportunity through potential takeovers, but also being able to get growth and income over time. The income being important because there's a lot of investors who are looking for that income component on top of the growth.
Okay, so now we're going to look at stock number 3.6. Is that what
now,
it is?
you're going to laugh at this one, but okay.
Telstra.
Yeah, look, I just threw that in there because it's just an oddball. It's not really considered an infrastructure stock. It's more I think now becoming a technology stock. But I think any stock I think that this could be a takeover target as well, but I think that any stock that's involved
it's a big stock. Who would take it over?
Telecommunications, infrastructure, roads, rail, anything like that that's, big picture stuff. We used to have so many big picture water companies, pipes, electricity. There used to be so many companies on our stock exchange going back, and they were government-owned companies as well, a lot of them. They got sold off in the 90s, which is really tragic because our stock market could be so much better.
I would think Telstra would be wise with all, I don't look at their war chest of cash, but they should be going out there buying
I think they should too.
Foreign telcos.
Yeah.
And building that war chest up to be.
I'm not necessarily foreign telcos, but maybe technology type stocks. And look, there's one more here. AusNet Services is another little one I picked out.
Yes, that's a good one, isn't it?
I've got another one actually. It's not just the one more. There's one more after the one more. Yeah, and again, this is a sideways move after a recent low, but this could be extremely volatile in the short term. And a lot more, if you don't have a good risk appetite, I wouldn't be looking at this one. But right now, it's actually starting to look really nice. If it closes up at the end of this week, it could keep going and take out this high on 30th of April 2021.
It's interesting how volatile it is, even though it's into power. Electricity and everything else. So
Yep. The challenge will be getting through that all-time high. So it might actually meet some resistance there. So you'd obviously want to have a decent stop loss underneath this to protect it in case it went the other way. But that one's looking interesting. And I've got APA as well, APA Group in there, which I don't necessarily, I like this one for a short term, but look, there's just so much resistance along the top. I thought I'd show this one.
There's a lot of potential. There's 20% plus to 30% before it gets to that
in terms of short-term upside, potentially,
It's looking good now.
if you've got the stomach for this sort of stock, But you need to. But look at the trends over the long term. These stocks can trend beautifully, but then go into sideways moves where people just have to accept that you might get dividends if they're looking long term, and you might not get a lot of capital growth.
Possible takeover target?
In the short term, I don't think so.
Okay.
Yeah, but could be down the track.
But it's looking good at the moment. It's looking like it's turning the corner from being down to up.
Yep.
Upside risk around some $10.80, $11, and obviously around about the $12 mark.
Yeah.
So from there, if you, maybe short-term profits there.
Could
Which
be
is what you
short-term
talked about at the
profits.
start. It's saying
Yeah,
there
I
could
said
be some
short-term, and then we're looking at also longer-term with a bit of growth and income in there.
Okay. Well, that's us for all from us on infrastructure stocks. I hopefully enjoyed what Janine presented today. But let's get back into some more emails. All right, Janine, you've got the first email.
Sorry about that. Oh, it just took. Oh, now we have a question from Chris. Hi guys, I've been sitting on ELD since late last year after entering at 11.20. It's just not giving the goods. That's an interesting way to put it. I began with a 15% stop, but in recent weeks it showed support at 10.80 several times, and my lack of confidence in the stock has brought my stop loss up to 10.60. It's very tight, I know, but there seems to be no buying strength. Do you see an upside to the stock in the next few months, Chris? Great question. Yeah. All right, look, his buy price, and it was really nice that he actually admitted that was when he bought the stock. It was actually quite high, but look how it had actually traded up strongly. You wouldn't know that was just going to turn and burn, would you?
No, you wouldn't. I mean, there's plenty of signals to exit up around this top as well, so there's a few signals there.
No, but I mean, when he was buying, it looked good, didn't it?
It looked really nice. I don't have an issue with it. They probably bought maybe a tad too late, but nothing hugely issue with it. So right now, at this point in time, looking a little bit better on your weekly chart, so looking a little bit more strength in here. Currently, we're on this week. It's only 2 days.
Yep, it's still really sideways, isn't it?
Still a bit sideways.
So what do you want to see?
Well, I wanted to see it move through that high of a couple of weeks ago, that 1173 high. If it starts moving through that, then I think it's got some potential there to move up. So right now, you're in a little bit of a profit. I'm not sure why you've moved your stop loss to where that is, and I think it's probably a bit of that, what do you call it?
I think that's wise.
A little bit of fear.
No, I think it's actually wise because he's bought the stock here. He's seen it fall down. There were a number of rules that he could have used to get out.
Correct.
Including a trend line, potentially would have taken him out there. And then he's ridden it up here, seen it get away, and then it's fallen away again. So if a stock doesn't eventually take off and do what you're expecting to do...
But what's he basing the 10% on? He's in profit right now. Is it 10% of his buy price, or what is it?
Good question.
I know, that's why I asked
I would say a buy price.
Of the buy price, but okay, so if it goes down...
If he listens to you, he'd be...
Yeah, but would you be at before 1060?
Look, I like this level here. For me, that low there, so if it went through there, I'd have to say that that's more likely to keep falling.
Yeah, you'd be out before 1060.
Yeah, but there's nothing wrong with his stop loss.
No, I'm just asking
It's a reasonable stop loss.
I'm just trying to challenge your thinking.
I would check, though, to see whether he's added the stop loss in afterwards, because if the 1120's around this level here, he's actually added the 10% stop loss after the fact. Yeah,
that's what he said. He's adjusted it.
Yeah.
Because he had on his email, if you let me read it, his email said his original stop loss was, he entered 11.20, he had a 15% stop loss, showed support at 10.80, and now he's adjusted it to 10.60.
So I actually like what he's thinking. Yeah. I really do. The fact that he's lifting his stop loss up.
Okay. There you go, Chris. How's that one? So well done, Chris. Janine likes what you've done.
I'm a fan.
You're a fan. You're a fan of Chris. Next is a question from Matt, who says, hi, Dale and Janine. I have a question on a Westpac. I purchased it in mid-November at $19.60 based on some rules that I had, expecting a short to medium term trade. I have recently sold at $24.80 in mid-July. My technical analysis showed that after it dropped below the $25.41 low in May, that it was on its way to making a lower low and therefore possibly heading down. The overall chart also looked to me like it was basically tipping over as it reached up to a high of $27. Could you please comment on my TA for this stock? Thanks again, Matt.
Right, well, I think he's got his decision to exit is quite timely and quite good. The fact that there's a trend up here, a trend line possibly right up underneath there, the stock's closed below it, I think he's made a good decision. Now, we've seen over the last couple of weeks the stock gapped up this week, so there's a potential that it's going to come back and fill that gap at some point. So that's now a risk for Westpac if it does keep rising. Look, I think the banks are at this sort of crossroads, if you like, where they could potentially tip and continue to fall, or we could see them rise into the end of the year before we have a pullback. And that's where I'm at the moment with looking at the financial space. And I've been recording some podcasts about these financial
stocks, yeah.
Because of that, because we know that at any time a stock can go one of three ways, and we've got to be prepared for all three. And then as we get a bit more data on the right-hand side of the chart, we just adjust which one we think is more probable. And right now, I'd say, okay, we can see it could keep going up, but there's that risk that's being painted by that gap. If it gets filled this week and then turns around and keeps going up again, then I'd say it's more likely to keep rising.
But would you have, if you had this stock from 1960, would you have sold out at this stock right now?
Yes, because we did.
Okay, I'm just asking you.
Yes, exactly.
There you go. So that's the question. Well done, matey.
All right, next question we have is from Ikapal. Hi, Janine and Dale. Data 3, DTL is the code. Share price has been going downhill since the 16th of June 2021, despite its good financial reports. Their revenue is up, their sales are up, their net interest cover, however, 2,621.45 for 2020, June 2020, jumped from 162.98 for June 2019. Can it be reason for the share price drop, or is it something else? Is it a good buy now? 458 as at the time of writing for a short to medium term strategy. I will appreciate both of your views as it gives a wider cover of the topic. Paul, is he saying we've got different opinions?
We never differ. Yeah, we do. No, we don't.
Okay, so DTL, Data 3 is a really interesting share, and I think that you should have this on your watch list, don't you think?
Oh, look, I do too, but is it a buy now? No.
I don't think so, no. It's falling. You'd be catching a falling knife.
I'll read it again, their net interest cover. Now, that's not a reason for it to drop, but it could be because obviously it's their ability to pay their debts, the interest on all their debts and everything else. So if their debt to equity ratio is high, then and their interest bill is high, then it could suggest issues there. But I don't think it's a big reason at this point in time because I do like it. I mean,
to me, it's all about the money and where the money's going. So if the money's not going into the stock, I just leave it on the watch list and I wouldn't even worry about it until it... This is where technical analysis... Some people look at it and they think it's complicated, but it actually makes everything so much simpler than worrying about reading these sort of reports and understanding that.
Data's a wholesaler, and it's a wholesaler in the IT space. So basically your local computer shop, they would be buying their gear from places like Data. So whether it's your computers or your peripherals, screens, bits and pieces for the computer shop, Microsoft have deals, obviously, so they'd be buying, they supply the Microsoft stuff to the shops. Rather than Microsoft dealing with thousands of shops, they deal with Data, and then Data has all the accounts with all the shops. So that's so having this floating down at the moment is just a sign that everybody all bought all their IT gear last year.
Okay.
That's my long way of saying the short answer is I think that's probably got more to do with it dropping more lately because everybody's bought.
So if the government put out incentives or some more tax deductions and things, then it might go up again. Is that what you're saying?
It might if people want more. But everybody last year, you couldn't buy, a webcam for love or money for so many months. It wasn't funny. Trying to buy a laptop was almost impossible. Screens were almost impossible to get, and PCs you could sort of get. So there was so long, and so obviously their warehouse is just emptied.
Look, let's talk about the chart now. So I really like the way that this is forming on the monthly chart at the moment, and I think that if it manages,
I love the stock.
Yeah, I think it's great.
I think it's a great
He's
stock.
saying is it a buy now?
No.
And definitely we've said no, but the fact is it's at an important level for the stock. Or very close to. So I think that, with a little bit more patience, it may actually start to trade back up. But I think more short-term thinking at the moment until it gets back above around this sort of circa, 620?
I've got to put my glasses on
Around
again.
620. Until it gets above there, you don't really know that it's going to go up again.
No, you don't. Cool. Now we have a question from George, and George says, hi Dale and Janine and team, maybe a topical question for right now for a number of companies' performance data releases. Now, I generally don't concern myself with increased price fluctuations around earnings time due to prior speculation, new rumours, etc., and just stick to my trading plan and the charts. Well done, buddy. But I would be most interested and like to hear your experience insights over the years to better understand the different aspects of market behaviour in the coming weeks. Thanks, and keep up the great work, George.
So he wants to hear more about market behaviour.
Well, with the US has been through its earnings season. Like this week, I think is almost wraps it up. I think out of the S&P 500, there's like less than 100 companies, probably about 70 companies to report to finish it off.
Any of note?
And financials, their earnings were awesome.
Yeah.
Way over expectations, around about...
No, I mean left to go.
No, not too many. Most of them, like financials and technology and all that.
So how's that going to affect our stock market at this point?
Well, what I'm saying is if you looked at that, a lot of the companies, around over 80% of the companies in the US actually exceeded analyst expectations.
Yeah, probably because they'd softened them so much because of COVID.
I don't know, but you can see, and what happened to their market in the last couple of weeks, it sort of jumped a little bit, but it's still trundling along sideways. So, but we've had companies like Apple said, well, maybe our third quarter is not going to be really good, and a few companies like that. But about 10% of companies have said their earnings in the next quarter are likely to be negatively impacted, and about 10% have said there's going to be more positive. But right now there's a lot of uncertainty. So what's going on in Australia? I wouldn't expect much different than Australia.
Right.
You know, so you're right. These announcements of their earnings, and it creates short-term emotions on the market, which happen for a few days. But generally, the big end of town already know what the announcement's going to be. They're pretty good at that.
I think the important thing is to actually look at those dates when the reporting season occurs. Go back in history over the chart and have a look at how the stock actually performed during that time, because that's going to give you a really good understanding of how things work. Our next email, Anna. Thank you very much, Anna. Hi, Dale and Janine. I have been watching your YouTube channel and I'm keen to learn trading. Good on you. More ladies getting into it. Also just started to read your book. I have invested $3,900 in PGH since 2018 and purchased at $405. Since then, the price hasn't done much. What do you think the future is, or should I sell? Regards, Anna. Obviously, Anna, you've got to make your own decision. It's not about us telling you what to do, but we will give you some great insights on the stock. So you've got it up there.
Yeah, she caught a falling knife, firstly.
She definitely did. It was a big one too. So the stock really plummeted into the COVID low once it got going, and then it's rebounded. So it's almost at the level she bought it at.
Use your mouse. You've got to give us some more than that.
I thought you were going to take over. I'm just waiting for you to do your stuff.
Ladies first.
Okay. All right, so the thing that I like about it is the fact that if it gets back above this $4 mark, because we can see there was a short-term peak created in 2019 at around the level that she bought. So we know that if it gets above that level strongly, it's got a high probability then of going on to around $5, could even go to $5.60. So that's the interesting thing with this share at the moment. And the beautiful thing about the chart right now is too that if it goes back below this low in July 2021, it's more likely to pull back and attempt to find support somewhere around 260, maybe 280 in the short term. But, you know, it looks good though, doesn't it?
It looks good now. It looks really nice. Now's the time you should be buying it, not when she bought it.
Right, okay.
You know, because a lot of people buy too early because they think something's cheap. And I'm not sure why she went and bought it, but she may have seen something and says, oh, this is really cheap, get into now, it's going to be blah, 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 and she's caught a falling knife. Now's the better time, and it reiterates what we talk about, is wait for confirmation of a move, not speculate on it. And so wait for it to tell you it's moving up to get into it rather than catch it while it's going down because you think it's cheap. And I do like it right now. So, but thank you for the question, Anna. It's really good, and thank you for being part of our show. Next up, we do have an email from, I'm going to try and say, you give me the hard ones. Pujan, hopefully I've said that right. Dear Janine and Dale, I own both Santos and Oil Search shares, intend to hold for 1 to 3 years, and am quite excited about the possible merger that may eventuate, in which Oil Search investors would receive 0.6275 new Santos shares for each Oil Search share. Now my question is as follows. Once companies agree on a merger and acquisition deal based on a merger ratio, will both companies' share price be highly correlated thereafter and act as a proxy for the other? Assuming there is a high likelihood for the merger to eventuate, is there an opportunity to capitalise on any price differential mismatch in the short term by acquiring shares of one or the other. I would really appreciate it if you could please elucidate the considerations on buying one or the other with easy to understand example. Your response would be highly appreciated. Regards, Pujan.
Great question.
That's a lot of big words I had to do.
Excited by this question and the fact that we're talking about two interesting stocks right now.
Correct.
And this is really quite amazing. When I heard that there's, they've accepted it and they're going to proceed.
So it's going ahead?
Look, that's what it sounds like. And I'm just so excited because it means that there's very low probability that these companies will get taken over because they're just getting bigger.
Okay, so first question is, with both companies, are their share prices going to be sort of intrinsically linked from now on? That's the first question.
Look, at some point they will be far more linked before the actual merger is finalised. That would happen. You can see that, but
So
there will always be a bit of
merger rather than one
arbitrage going
taking
on
over.
with
Yep.
people in the marketplace playing around with the price. That's just a natural thing.
But is there an opportunity there, or is it something that's worthwhile, or something that's just high risk?
I wouldn't play around with this thing, but then that's not my area of expertise. I don't try to. It's big institutions that try to trade for a few cents here and there because they've got big money involved. But I don't tend to try to do that sort of thing. Do you?
No. I'm just asking. I'm just making sure we're answering his questions because I don't think it's worth worrying about that sort of arbitragey type thing. And to me, it's sort of like, well, which companies? If one was just going to come in and buy out the other and merge it into itself, well, then that's a different question again. If they're just merging together, and obviously Oil Search shareholders are getting Santos shares, so probably if any share is going to benefit more, it would be Santos if it was going to go up, because that's the end share you're going to have. Whereas they've already said for every Oil Search share you've got, you're going to get X amount. That they've already put that in stone, so that's not really going to change.
Yep.
So therefore, if you're looking at any sort of opportunity, it would be in the Santos share, not the Oil Search share. That's pretty much all I would say to that one. But I think it's great.
I think it's exciting too. And look, if you look at, I had a look at the two shares to sort of decide whether I thought one was likely to rise more than the other over time if they didn't, do the merger.
Yep.
And I think Santos was actually the higher one in terms of potential in the short term anyway, even though Oil Search longer term could end up right back up at $7 over time. Okay. I just think the volatility and the pattern that we can see on Santos is really exciting on the long-term picture. Okay. So next, an email from Marty. Hi, Dale and Janine. Would you be able to have a look at Dicker Data? I got in early at $11, and most recently they've skyrocketed due to a New Zealand acquisition. Do you see any further legs in the business, and should I top up more, Marty? Have you copied the same question in twice?
I'm just thinking, didn't we just do Dicker Data?
I think you're just trying to pull me up here and trick me, isn't he? I think he is. I don't mind looking at the stock again. Look, we could just go through to the next question if you want to. It's up to you. Or do you want to look at Dicker Data?
No, it was two questions on Dicker. No, one was Data 3. We did that one, didn't we?
Data 3? All right, I've got Dicker Data on the screen.
Did we do Data 3?
Yeah, we did Data 3, but you might have been talking about Dicker Data when you were talking about Data 3.
I might have got it wrong, sorry, because I knew we were doing Dicker Data.
Well, now you can say everything again. I want to hear it all again. Exactly word for word.
Just rewind the tape and do it
Say
again.
it again.
No.
All right.
So
we can see here right now, look at this chart. It looks awesome.
It does look awesome.
It's amazing. Look, if you were on this stock, you'd be so excited. He bought in early 2021 and it's taken off like a rocket above $14.
That's beautiful, isn't it?
So you would stay with it. There's a big gap there on the weekly and monthly charts at the moment, which is a concern. However, you would want to have a nice trailing stop underneath that. Would a trend line work in this case when a stock blows off in that regard?
It may, because sometimes I've had stocks that I've traded and it's just blown off like that, and I've just waited and waited, and the stock's come back, confirmed a trend line, and a couple of weeks later I'm out.
Okay, you've hidden your trend line, haven't you?
Hey?
I'm just trying to find it. All right, so we can see there that there's a nice...
It's our laptop, not my
There's
laptop.
a potential trend line there, not one that's confirmed yet,
Correct.
but that's interesting to see that unfolding. So we may get a third point for the trend line in this at some stage. We'll see if it comes back again.
But it's looking so strong. I mean, 2 days this week, have a look at that. It opened, gapped up and opened, it's trading high. So, but I would say, don't expect it to look like that at the end of the week. Don't be surprised there might be some short-term weakness towards the end and the close comes back down a little bit, because sometimes when you get that explosion out of the blocks, through here you might see it pop back down again, or even over the next week there might be like an inside bar, like something like a short bar like here or in here. that'll come into it, and it'll slow down a little bit because it has
It could go
exploded
to $15 or $16 first, though.
But it could do that too, yeah.
Mm.
So don't necessarily, it's if you're not in it right now, would you be getting into it?
Great stock.
I asked a question.
No, I wouldn't.
You just got domestic deafness again. No, you wouldn't.
It depends on like what your entry trigger was, you know.
Cool.
I mean, if this we're talking about a monthly chart here, not a weekly chart that we're looking at. If we go to the weekly now and we have a look, I tricked you.
You did trick me. The weekly's always on the right, not the left.
Okay, so if we are looking at this here, and just say, for example, our entry was once it went through that level and the entry gapped up, the stock's already gone up 20% from where your potential entry is. So it depends on where the entry was.
Correct. Okay. All right. Well, let's move on now. I'll do the next question.
Okay,
now
great.
You've embarrassed me. Okay. Next up, we have an email from Peter. Just looking at Fortescue Metals was looking at entering. Notice there's a double bottom on the chart for the daily. Just like to hear your thoughts, as it probably should wait for confirmation that it's turning, as you would say. Cheers and thanks again, Peter. Double bottom on the daily chart is next to CREP.
Oh my gosh, like what you do your head in if you start thinking like that. You've just got to wonder, where have you been looking? Oh, you know, bottoms and tops. We're always talking about that, aren't we?
That's not a double bottom anywhere.
Look, it's okay because you've got to learn. Everybody's got to learn and they only know what they know at the time. So if you don't know, if this is what you're thinking at the time, you really need to get more knowledge right now. Really, really important. To have a bit more of a bird's eye view of what's going on. What we can see with this stock is there's been more of a consolidation and then a breakout and it's come back into that sideways consolidation.
Yep.
So at the moment, if anything, you've got a potential double top there that's formed, which could be,
it can be
a question
really
mark, couldn't it? It could be very bearish for FMG. Now, one of the saving graces I can see there for Fortescue is it's gapped down when it's fallen, which means that it could come back, find support through this sideways move and then start trading up again. But right now, there's a short-term risk, at least, with the stock, isn't there?
Yeah, and I think with daily charts, and I'm going to really say this as direct as I possibly can in our no BS style, is daily charts are next to useless to 99% of people. So if you're using daily charts and you're trading, unless you're really intraday trading and stuff like that, they're pretty much useless to you as a trader because they're really only short-term emotions. So please stay away from them. That's the biggest sin that traders have, that I see right across the board, and I've been seeing for well over 20 years, is people using daily charts to their detriment. So please do yourself a favour, stay off them and you'll trade heaps better. Now you can have it.
All right, now we have a question from Sal. Hi, Dale and Janine have held some Macquarie Bank shares for about 15 months now.
Great.
And have been invited to participate in the security holder offer of Macquarie Bank Capital Notes 3. Shares have since purchasing increased my investment by 49%. My question is, how do these offers work? Risks involved, and do they have an initial impact on the share price? Thanks, an advanced sell. The answer is often they can have an impact on the share price because if there was money out there that was going to go into Macquarie Bank and they decide to take these capital notes instead, well, obviously the money's being diverted into the notes instead of into the actual, listed stock. So, but the notes actually typically are like a hybrid, aren't they? They're a hybrid that trade on the stock market, and they often, they're far less volatile typically than when you see the banks releasing a lot of these. They're far less volatile than the stock, but they produce the income for people. So often they can be a good income play for somebody, but the volatility isn't as high. So you don't have a scarier ride, but you're unlikely to make a lot when it comes to the capital growth in them.
What is it? They're generally it's for raising capital for something. Generally, that's what it is. And so they pay a higher dividend yield, sometimes fully franked.
And you need to understand the risk with these capital notes as well, because it all changed after the GFC. Prior to the GFC, these capital notes, in my opinion, were worth a lot more than they are now from a risk return point of view, because of the fact that they changed the contract basically. I think it was all through APRA were involved. They changed the way that banks write these contracts and the detail that's in them, and people don't read.
No, they don't. And it's easy to find this stuff. I mean, generally the interest rate's basically a percentage above something like the RBA rate or the bank bill swap rate or something like that. So just read the details if you want, and if you want a good and a dividend yield that's better than putting your money into a Commonwealth Bank, into a Macquarie Bank account, then you might take it. But you know, you're not going to get capital growth out of that, really, are you?
Oh, look, you can get a little bit, but then you could end up being back at at the price that you bought it at, or even lower. I've seen some cases with those capital notes. It just depends on when you need your money. It's like shares, but just not as volatile.
Yeah, and I'm not sure of this particular one, but generally they're like for so many years, and then they vest into an actual share in the bank.
It's just changed so much now that you really have to read those documents just to confirm what sort of capital note that you're getting and the conditions around it.
That's Janine's advice. Read the document before you do it, and if you're happy with
Macquarie.
Why?
I don't know. I thought it would look interesting to see if it's fallen away, because she was asking, or the person was asking the question about how it's affected the stock price.
I was just wound up ready to the next one. Okay, you can do.
Nobody's in my ear saying you have to wind it up.
Well, they might be.
Okay.
We're already over time.
I'm looking in here. This is where 15 months ago, is that roughly 15 months ago? Somewhere,
something like
or was
that,
it through
no,
here?
That's probably.
Yeah, I can't tell.
Well, March last year was close to 15 months ago, so that was near the bottom of the G's.
Okay, so at the top, it would have been around here somewhere.
So to stop talking and talk.
Okay. But we can see it's gone nowhere.
Correct.
More or less. And look, all of the banks have done the same thing. So we can't really say at this point that the talk about the capital notes has impacted on it just yet. So it'll be interesting to see when it all goes through.
Okay, so you're happy now? You've watched the chat?
Yeah.
Great. Okay, that's...
Actually, one easy way that she could determine, or he could determine this, is to go back and have a look at the previous issues of capital notes and then see what the share price did.
And you tell me I talk a lot.
Jeez.
Well, that's our thoughts on the Macquarie Capital Notes.
Just a reminder that it is our intention to take a few live callers into the show each and every week. And that said, the best way to ensure that you get your question answered is still to send in an email. We didn't have the live calls, but we are looking to do that again next week. So look out if you're wanting to have your voice heard on the show next week, be watching. So if you're sitting there watching the show and you're thinking that you should ask Janine and Dale a question, then my advice to you is don't think about it. Just email your question right now.
I'm with you. Now, Janine and I are more than happy to answer your questions, as we know you will learn more if you participate in the show. And remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we ask is that you hit that subscribe button to our channel first and then send in your email. Now, we strongly suggest you send your email in right now to be in the front of the queue. And I know today we had nearly twice as many emails as we could answer. So send them in quickly, and we always go...
Sorry? I'd be a pain, wouldn't I?
You would.
Again, I need to remind people who are asking questions in the comments section of our videos or on Facebook, if you post there, your questions will not be answered. So to avoid being disappointed, please email us your question.
For those of you who are uncertain about what to do and how to consistently profit from the market, then stop playing guesswork and start trading with confidence. All you need to do is give our team a call. It doesn't matter whether you're just starting out or you are along the road somewhere in your trading journey. All you need to do is call the team on 1300 858 272 or visit our website wealthwithin.com.au.
Well, that is it for our show for tonight. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions. So now it is your turn to help us. And right now, hit that subscribe button on your screen to say thank you to the team who put in a big effort to bring you this show each and every week.
Also remember to put the show into your calendar to join us right here on the live on the Australian Stock Market Show every Tuesday, 7 to 8 p.m. And if you'd like to have your question answered again on the show, send your email to info@wealthwithin.com.au and type Wealth Within Live, in the subject line. And remember, you must email, and you must do so before 3 p.m. on the day of the show. Or while the question is fresh in your mind, you can just email us now.
As always, thank you for joining us, and we hope that you've had a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.